I was sitting talking with my members in the Sector Secrets Mastery, and we kind of all agreed. This is the message, and this is the main message. All-time highs are never bearish. And that is to quote Henry. I'm sure that this is something that a lot of you know, but then there's probably a lot of you out there saying, but Rag, I hear that we're going to crash later on. I hear that we're going to rally to an all-time high, and then we're going to sink like a stone. And remember, everything needs a narrative and a map to that. So let's talk about both sides of that conversation, but let's do it rooted in data, right? So first of all, the way that we would break down the data is really simple. First of all, why is the NASDAQ leading the charge? Because 4 sectors make up the NASDAQ: semiconductors, technology, communications, and consumer discretionary. And all 4 of those are in the top 5 of the sectors in terms of normalized performance. Okay, so this is a motor firing on all cylinders. The next thing we want to look at is whether or not the Federal Reserve is still preparing to cut rates. Data point number 2, 70% probability that we're going to see a rate cut in September, and then that continues to roll over into another rate cut in November, and then potentially a 3rd quarter point rate cut into December. Forget the fact that we're still looking at lower rates going into even April of next year. All right. So the dovish cycle doesn't end because the year does, just the year ends. The next thing we want to look at is, all right, talking the other side of what could be. And I'm all for that. We always want to be aware of the other side of the conversation, which is a great lesson I learned in debate class in college. A professor said, look, you're going to make up your argument, but the best thing you can do is imagine the counterpoint and think about what they're going to come at you with. So I think whenever I'm bullish, I at least want to entertain why someone out there might be bearish, right? So if we go out to Thursday of this week, if there is going to be a trigger for a pullback, it certainly was not Powell on day 1 of his testimony. It likely will not be Powell day 2. It's going to be core CPI. Now, core CPI is the lesser of the 2 inflation metrics because the Federal Reserve uses the PCE in their models. But CPI is far more attuned to what we are living here on Earth as opposed to whatever it is the Federal Reserve is using in their models. But it doesn't matter. It's a huge inflation gauge. And this has got to print flat or lower than what you see here for the Federal Reserve to stay on track for September. Now, if these tick up, if the year-over-year CPI is above 3.1 or heaven forbid 3.3, if the month-to-month CPI is above 0.1, if the core CPI is above 0.2, that's going to be quote-unquote bad news, right? Bad news for inflation actually is bad news for the equity markets, because if inflation is not going lower, then the Federal Reserve does not have to cut in September. They can wait, and they'll have the data to justify that decision. If this is flat or lower, they will have no choice but to cut in September. So if you're a bear, or I wouldn't even say a bear, because being a bear right now makes no sense. But if you're waiting on a pullback, Thursday morning, 8:30 would be the catalyst for that. Now, if you're waiting for a pullback in overall uptrending indices like the NAS, then another window opening for a pullback buy where a green candle could trade into the gray zone of the daily price movement range would be in the aftermath of that 8:30 hot zone. Remember, NASDAQ futures will be trading. So if you're wondering, hey, Rag, on Thursday, if I see a green candle in the gray zone on a pullback, would that be worth buying? I sure think so. Because again, just because the Fed would delay the cuts doesn't mean they're not going to do them. Yes, they can continue to kick the can down the road, but as long as we expect lower rates somewhere out in the time horizon, the equity markets will continue to rally. Another way to confirm that yields are convincingly going lower is keep an eye on the long bond. Keep an eye on ZB. And if you take a look at what ZB ultimately did today, Powell did not dissuade or persuade anyone to do anything other than just keep a holding pattern. We're all waiting on CPI. So that's where we are right now, waiting on CPI, and all-time highs are never bearish. Keep an eye on the strong sectors and the strongest index, which continues to be the NASDAQ, followed by the S&P. I'll see you all in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.